Hi guys, welcome to another video. So today is Wednesday. We're going to share a little bit of the market update and how the new Fed chairman will affect the stock market and the housing market. So that is basically what we invest in the stock market or the forex market. We always have to look for some information like FOMC meeting and decisions. The key thing that is not taught at school is that people will anticipate the result before the result actually happens. That is something that we have to keep in mind. Otherwise, you will most likely end up with losing money. That's what I did before. So we will now play a game of anticipation. Today is October 25th, so it's around 6 days before the FOMC decision is made. And now we talk about the FOMC after that, which will happen in December, not this one, because we're talking about the Fed new chairman who's coming out, right? So we'll explain their strategies and how they will have their specific goal and procedures in the interest rate hike, in terms of speed and in terms of the room of the hike, so we will understand the housing market a little bit more. So now, if we know Janet Yellen is we call Dovish, right? So what they're doing, what Dovish people do, they will look at information, look at data. They will do it afterwards when they're sure and confirm of some signals. So we know that we all say that we would expect the US will have their interest rate hike in 2014, and when Donald Trump elected to be president, he's saying that he said that they will raise interest rate for 8 times, and now they just did it for 2 or 3 times. Okay, so this is what they do. They say it, they're not doing it, right? They are really procrastinating things, so they will make things certain before they make any move. So we understand that the updated news is the Powell. Okay, Powell would be most likely the high chance for now that he will become the next Fed chairman. I believe so, because it's hawkish, which is in the same party as Donald Trump. If they're in both different parties, their strategies are not too aligned, right? So what he's doing is really dovish. Okay, so he's a hawk, but he's a dovish hawk. What does that mean? So he's in a party that playing things aggressively, and they will have what we call hawkish is they just look at 1 or 2 data of CPI, then they will raise interest rate. So they will act fast, okay? But he's saying that market is anticipating that if Powell becomes the Fed chairman, he will raise interest rate even slower than Janet Yellen. That's something that we have to know. So recently, we look at the US dollar to dollar index is not moving a lot, and the 10-year yield is plateau. That is something that market is saying that, oh, maybe we should wait a bit, because Janet Yellen is not raising the interest rate fast enough, and even Powell will raise the interest rate slower. And the third option, which is the least chance that would happen, is John Taylor. Okay, he's the one. He's the one. If he becomes the Fed chairman, he will raise interest rate really fast, maybe 8 times 1 year. Who knows? But we have to keep in mind that we always saying that the interest rate will be hiked for like once every 3-6 months, right? But historically, in 2014 to 2016, 2004 to 2006, the interest rate hike actually raised every single month, and sometimes they're not raising for only 25 basis points. They will raise it by 50 basis points. So keep in mind that the previous video I talked about the bubble and bubble bursting are 2 different things, right? So for the bubble bursting video, we talk about the interest rate. So we know that if you haven't watched that video, I suggest you to watch it. If we know that 100% of the time it will show a signal of a bear market, of a recession, we understand that US will only have minimum 8 times to raise the interest rate, and the interest rate will become 3%, and potentially the bubble will burst anytime. That is the key what we talk about in that video. So we know that if John Taylor becomes the president, which I think is more unlikely, but if he's the one maybe all the bull market expansion, economic expansion will be shortened, and the recession will come earlier. Okay, let's say 2018, if he's raising interest rate for 8 times, each time 25 basis point, and potentially any time will burst. Okay, it will burst anytime. Or he can raise interest rate for 4 times, each time 50 basis point, depending on how hawkish he's going to do. So this is something that we have to aware. So now the good news is most likely is Powell being the Fed chairman, right? So he may be raising interest rate, but you will say that compared to the before, so he will raise the interest rate slower than before. No, because the US economy and the inflation and the urgency is a lot more urgent than the years before. So the most dovish he would do, what I mean is the slowest he would do would probably still faster than what we experienced in the Fed interest rate hike in the past few years. So that is exactly why what people has missed, and they don't know about this issue. So they would think that the US dollar would go down, right? Because he's raising interest rate slower than before. No, because the economy doesn't allow him to do it too slow, and there's proof and evidence that he has to do fast. So he can do slower than fast, but it's still faster, right? So we can see that the US dollar may rebound, and as technically in charting, in technical analysis, if it's going to go down and destroy the bottom hand and the reverse head and shoulder pattern, the chart in the chart it would just free fall. That would be the case, but we don't see this signal. So now it's around 93.95. So I talk about 94 and how important is 94.7. So these two spots is in terms of speculation. You can have long position of the euro dollar, of the US dollar, or short euro to US dollar until it hits the neckline. If it breaks above, don't tell me you don't know US dollar is going to have a big time strong rebound. Okay, the target should be at least 96.5. So it's pretty much crazy. So now let me break it down for the housing market. So now general people will think Powell will become the US president, US Fed chairman. Then they will think that, oh, they're raising interest rates slower, so they would think that the housing prices will go up in the short term. Okay, yes, it will go up in the long run, yes, okay, but in terms of short term, it's not going to go up because Powell is doing things slow, but not that slow, okay, because the economy doesn't allow him to do anything like that. Otherwise, the inflation will go crazy, housing market will go crazy, right? So he still has to raise the interest rate fast enough so the housing market will not have a bigger bubble, okay? So so reality, what I think is short term the housing market will adjust a little bit. If they don't, the market doesn't know now, wait until November 1st and December FOMC meeting, then the housing market will come down. So how am I supposed to prepare for my strategy? So if you want to buy a house, especially your first house, you can wait for 1, 2, or 3 months until the price goes down. If the market knows now, that's good, they're smart. If the market knows later, when they literally raise the interest rate, the housing market may adjust a little bit. That is this slight room for you to kick into the market, and then in 2018 it should hit historic high again. Okay, so in general, what about global housing market? In general, it will follow the US Fed decision and US economy in general. So other than your country, where you live, where you reside in, sucks. If not, they really usually will align with the US economy. So let us go through the FOMC probability of interest rate hike. Okay, so next meeting will be November 1st. So we can see, luckily we will see that this is the interest rate future contracts. We will see that there's only 12.4% of the probability of hike. So if you expect the housing market to drop, especially in United States, it may not. But right after November 1st, we do not have to wait for December 13th, because the first thing I talk about in this video is people always anticipate and always lead anything they know after. So they will just take their chance and do something first, okay, before it happens. So right after that meeting, which is November 1st, 2 to 3 a.m. in Eastern side, or 2 to 3 p.m. in US side, in the Eastern time, people will start to reflect this probability of 87.4% of probability hike in December 13th, and the housing market will drop will start to adjust a little bit, just a little bit, not long term, before December 13th. That is the case. But at school, they taught us about the housing market will adjust after December 13th, and the US dollar will rebound, right? But they missed something. People always anticipate and take their chance to do things first before things actually happen. So why not this meeting, right? Because this meeting is still hosted by Janet Yellen, right? So the next meeting, probably they have the new chairman, and depending is he hawkish or not. But as I said before, either is Taylor or Powell, they're going to raise interest rate. There's nothing they can do. It's too urgent. So that is something they do. Janet Yellen is not doing it because probably she doesn't want the big responsibility and something that will be put in the books that will be destroyed, or good or bad, will be done in her hands. So that's my thoughts. So hopefully you can have a better preparation and strategies for the upcoming stock and housing markets. So I'll see you next time. Remember, investing made easy. Please subscribe to the channel and like my Facebook page. Give me a thumbs up, and please share this video to your friends. It's pretty much difficult and hard, and every Wednesday and Friday, just chill without any edits. I will just say something my research team has done to you guys. Hopefully the language is not such a big barrier, but the information in terms of preparation and strategies are all here. It's all from my research team. Hopefully you like this video. Give me a thumbs up and leave me any question or anything you want to add into comment box below. I'll see you next time. Investing Made Easy. Goodbye.